The Commercial Real Estate Show is brought to you by Cone Resnick, forward-thinking advice to navigate business and financial issues. Visit coneresnick.com. By BB&T, banking, business, and commercial real estate loans. Visit bb&t.com. And Bull Realty, when your business requires proven performance, visit bullrealty.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And laugh, I believe we have to have some fun along the way. Well, hello, I'm Michael Bull, your host to the world of commercial real estate. If you have any questions or comments related to today's show or any commercial real estate related endeavors, we do enjoy hearing from you. Give us a call at 888-612-SHOW. Or you can email us at info@creshow.com. You can also reach us through your favorite social media sites. You can find them all at commercialrealestateshow.com. Well, today we're going to explore the hospitality industry. Please welcome my first guest, Mark Woodworth, President Colliers PKF Hospitality Research. PKF manages an extensive database of hotel property income statements and sale prices. The data provides the foundation for their e-business product and custom research relationship. Mark, welcome back to the Commercial Real Estate Show.
Thank you, Michael. I appreciate the opportunity. Good to be with you again.
Well, thanks for calling in. Where are you today?
Actually, I have the good fortune and privilege of being up at the hotel school up at Cornell University in Ithaca, which life can't be better than when I'm up here, although I must say coming into the hotel this morning, having it snowing out was a bit of a shock for an Atlantan this time of year. But happy to be here.
That's great. Well, where are current national average occupancy rates, Mark, and daily rates around the country right now?
Michael, they're at a very important point in the cycle, and I say that in that we are getting very close to arriving at the long-run average occupancy level of approximately 62% per Smith Travel Research. And we know that's an important milestone when we look at lodging cycles, and particularly when we're going through a recovery period, in that when occupancy levels get back to their long-run average, that's when pricing power really comes back in a big way in the hands of managers. So with the attractive room rate growth that we've seen in the vast majority of markets around the country for the last couple of years, we think is really going to begin to accelerate, particularly as we move into 2014.
And those occupancy rates for the listeners who aren't in the hotel industry, how does that relate to what we call normal occupancy rates?
It's the long run average and say normal levels of occupancy, and a lot of others, as you allude to. We look at vacancy rates and so forth. That's very, very typical. And again, that's the national average. As we move around the country, you have certain markets like a San Francisco and New York, where that long-run average occupancy is well up into the 70s, sometimes approaching 80%. But that's a function of just the unique characteristics that are indigenous to those particular markets.
Okay. Well, I guess I'll have to change my broker pro forma 90% occupancy.
There you go.
I'm just kidding. What about average daily rates? Where are rates now? Are you starting to see some increases?
Yeah, we saw some very good increases. Last year, according to Smith Travel Research, the average hotel in the U.S. Realized a 4.2% year-over-year gain in prices. Our current forecast for 2013 sees that lifting up to approximately 5%, with an incredibly strong 6.2% is what we're forecasting for 2014. So as I mentioned, it's pricing power in the vast majority of markets has really increased substantially.
Okay. And which types of lodging properties are performing the best right now? Is it the high end, the low end, the resort? What do you see there?
Yeah, we're still in a mode, Michael, where one of the ways I think of it is the higher your room rate, the better you're probably doing. Now, specifically, we saw was the luxury segment, the highest end of the industry, which number one took it on the chin more than anybody in the Great Recession that we've just coming out of. So they had a pretty big hole to climb out of. but they've done a great job doing that. So luxury hotels have seen some very, very significant increases in both occupancy and rates. And then as we move down to the other food groups, the industry terminology, upper upscale and then upscale, think of Marriott, Hyatt, Hiltons, Westons, getting into things like Hilton Garden Inns and Courtyards. Those higher price categories really across the board have seen some attractive gains, and we think that that strong performance is very much going to be sustained for the foreseeable future.
Okay, and that's great. And how about casinos and resorts? Are they doing better?
We don't track the casino or gaming industry really that closely at all. Anecdotally, the casinos, and I'm thinking specifically of locations like Las Vegas, New Orleans to a degree, of course Atlantic City, they're doing better but still have a long way to go. There's still a lot of downward pressure on prices. Resorts, on the other hand, are finally now beginning to get some traction. Part of it is again, that higher-end traveler that I mentioned, luxury hotels were doing well and so forth. That higher-end traveler, whether it's a leisure consumer, we're slowly seeing the group conference meeting segment come back. And importantly, we've seen record levels of inbound international visitation to the U.S. We set a new record in 2012, and the expectation is even more folks are going to be visiting us in 2013. So all those are driving some nice gains in the resort segment as well. Okay.
Well, that's great. Well, it sounds like I can still get a good deal at my favorite hotel. They do drop in, right?
Absolutely. Yeah, you're a frequent customer there, I believe.
That's right. Well, what about transaction activity? What types of volumes are you seeing? And are transaction volumes, are they moving up? What do you see there?
I'd say they're moving up slightly from our vantage point. Last year was a better year than 2011. 2013 maybe will be slightly better than what we saw in 2012. The real key is that there's and we've been doing a lot of research on this of late. If we look at what's been happening with hotel property prices, while income gains have been very, very attractive for the last 2 to 3 years now, we've seen very little appreciation in 2011 and 2012, and we say that in the context of looking at how property prices have changed. In hotels, they've been basically flat, whereas in all the other food groups, office, retail, industrial, multifamily, we've seen some very, very good lift in property values the last couple of years. So there's something that's going on within the lodging industry. We believe that from an investment perspective, as good as the fundamentals are, and they are extremely good, hotels are being penalized now because of the uncertainty that characterizes the marketplace, and that hotels, unlike all the other real property types, as you know, we operate on 24-hour leases. So we think that short-term rental characteristic of hotels is really hurting property appreciation today. So that's not good, but we think that really the great news is that's going to be dissipating as we move through 2013, and we expect some very attractive pops in hotel property values in 2014 and beyond.
Okay. And is some of that caused by the capital stack, maybe the lenders out there just choosing to lend on other types of properties rather than hotels?
Yeah, and liquidity is still very much an issue in hotels. So borrowers just can't get the kind of debt capital they were looking for. Yeah, another factor, and this isn't necessarily unique to hotels at all, but that we think is suppressing transaction volumes is there's so much in those CMBS pools that are coming up for maturity 2014, particularly 2015, that we also think that a lot of investors are continue waiting on the sidelines to see how do these loans get resolved, and might there in fact be some good opportunities coming out of those CMBS pools as these properties begin to mature.
Okay. And what might surprise people about the hospitality industry today, Mark?
I would say it's the fact that by just about any measure that one could take, that I would say that hotels have really led all other property types in terms of the overall recovery. We've seen some very, very attractive increases in demand. That outlook, we are very comfortable, is going to persist through 2015, 16, maybe even beyond. So really, it's just the strength of the fundamentals are looking better than just about any 5-year period of time that we can look back to. So a lot of people seem to be surprised just because things like unemployment and people looking for jobs that we know historically are important to hotels. The industry's been able to work through that this time around, and things are looking extremely good.
Well, Mark, thanks for joining us today. We appreciate your intel.
Okay, Michael, thanks a bunch, and I appreciate it. See you soon.
For more information from Mark Woodworth with PKF, visit pkfc.com. Well, stay with us. We'll have more information on the hotel industry. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is made available by professionals at Cohn Resnick, BB&T, France Media, and Bull Realty. For more information about these companies or to access additional show podcasts or videos, visit commercialrealestateshow.com.